Good morning and welcome to today's live technical analysis session. As always, we are starting off with the euro against the US dollar. As you can see, we have placed our support level at 1.0600. The pair appears to have tested this support level on two occasions, and we are on the daily chart. So you can see that yesterday tested and bounced off, and today as well, it is finding support at S1. We would maintain an overall bearish market sentiment. Overall a bearish outlook for the particular pair. The RSI is still at 32, which does imply bearish market tendencies. For a bearish outlook to continue, we would require a break below that S1 level. Next target is S2 on your screens at 1.0440. Now, we do have the release of the US CPI rates later on today, which are expected to accelerate on a headline level, and in particular on a year on year level from 2.4% to 2.6%, which may be concerning for the Fed. Moreover, the Fed might be looking for a justification to remain higher for longer, given that the incoming administration's economic policies could lead to an increase of inflationary pressures in the US. As such, should the CPI rates showcase an acceleration of inflationary pressures or even a persistence of inflationary pressures, and I'm referring to the core CPI rates on a year-on-year level, which are at 3.3% and expected to come in at 3.3%, then we may see a further strengthening of the US dollar. You can see that it's about to be formed, a death cross is about to be formed with the moving average, the 50, about to cross over, so cross below the 100 moving average, which might be a bearish signal in itself for the primary trend direction. On the flip side, for a bullish outlook, we would require a clear break above that R1 level of 1.0755. Higher than that, we have 1.10 as our R2 level. Sideways bias, failing to break above R1 and failing to break below S1. USD JPY appears to be nearing dangerously close to intervention levels. We have S1, well, we had R1 at 154.80. You can see that today's daily candlestick is about to break above. It has already broken above, but not closed above. It does appear, though, to be moving in an overall upwards direction. Note the upwards moving trend line remains intact and is about to close above that R1 level today. We would maintain a bullish outlook. Same reason for the euro against the US dollar. The dollar, we are expecting it to strengthen, which in turn could lead to upwards pressures on the USD against the JPY. If it does break above that R1 level, so if the daily candlestick closes above R1, the next target for the bulls could be at 158.35. Now, if today's candlestick does not close above R1, and then we see a retracement, let's say on Thursday and Friday, then we could opt for a sideways bias between S1 and R1, which are clearly defined on the right hand of your screens. So S1, 151.30, as you can see by my cursor. And then we have S2 at 149.10, S3 146.45, S4 at 143.45. If it does break above R2, nearing, then the next target could be at 162.0, which is a round figure, and RR3. Somewhere around here, I would not be surprised to see an intervention by the BOJ in order to support the yen. GBP USD, BOE policymaker, about 15 minutes ago, came out and implied that the battle against inflation has not yet finished, might be relatively hawkish. But if we look at it from even at a 4 hour, you can see it is below 30, implying a strong bearish market sentiment. Might be slightly oversold and due a slight correction upwards. But even on the daily chart, the RSI is at 34, which does imply that the predominant trend is downwards moving. And it has broken below that S1 level we had placed, 1.2845. So the next target for the bears could be 1.2675. Now, I would not be surprised to see a candlestick moving up to that support turn to resistance level to validate that it is indeed support turn to resistance. And then we might see the pair continuing on its downward trajectory down to that S2 and then even lower, potentially to 1.2515, which is our S3 level. Now, with the most recent price action having broken below that S1 level, it is support now turned to resistance. I'm simply changing the color of the line and the color of the text label to show to you that this is now resistance, something you probably have guessed yourselves. but it looks much nicer on our charts. So we do have our 3, then we have our 2 at 1.3040. So that's nice. And of course, we are using the daily chart. We are simply trying to gauge the predominant trend. Now, if we drop down to a 5 minute, a 15 minute, a 30 minute, it might be different. If you're into intraday trading, the daily chart may not be of use that much, but it could help identify the predominant direction of the particular pair. Nonetheless, we are staying on the daily chart. We have R1, R2, R3, S1, S2, and S3. So this is S1, this becomes S2, and then we have S3, 1.2295 as S3, and that will turn green. So we have our support and resistance levels. Moving on, USD CAD, Canadian dollar. The dollar against the Canadian dollar has broken above that R1 level, flipping that from resistance turn to support. That is, if the daily candlestick closes above that R1 level, the next target could be at 1.4115. Higher than that, we have 1.4270. If we cross that path, I'll place another resistance level higher than R3, but it still has some way to go. For the Aussie, now I had placed this as well at my looking at the charts report, which is on which is public as well. It has broken that S1 level, so we are maintaining a bearish outlook for the Aussie against the US dollar. Excuse me. Next target for the bears could be 0.6470. RSI is at 38, which does imply a bearish market sentiment. Dollar against the Swissy, taking aim for R2, 0.8920. Bullish outlook for the particular pair. The Kiwi, New Zealand dollar against the US dollar, broken below S1, taking aim for S2 at 0.59 round figure. And then lower than that, 0.5850 bearish outlook as well. Crude oil appears to be moving in a relatively sideways fashion. Note the numerous occasions that the commodity attempted to break above R1 at 72.10. It has failed to do so. OPEC has also revised demand expectations low for the year, could increase downwards pressures. Moreover, with Trump's oil agenda, so energy agenda, which is drill, baby, drill, we would be maintaining a relatively bearish outlook for crude oil. From a technical perspective, one could note that the RSI is at 44, which does imply bearish market tendencies. But then I would implore you to look at the support and resistance levels. It does make sense. It could move down to that S1 level to validate that as support and then continue moving in a sideways channel between S1 and R1. So that RSI at 44 isn't that concerning. You can also look at the Bollinger Bands. They've narrowed, implying low market volatility. And look at the RSI, moving back to 50, further validating our sideways bias. So we are maintaining a predominantly sideways bias for the liquid gold. Now, moving on to actual gold. As you can see, we had placed the support levels before. S1 2600. Very nice, bouncing off that S1 level. Perhaps due for a retracement back up to R1 or even this bullish candle's wick before continuing moving lower. Now, of course, the people that are being nominated in the US's incoming administration could influence foreign policy and by default could thus influence the precious metals price. Overall, we're seeing more attempts towards negotiations, either in the Middle East and then over in Europe between Ukraine and Russia. The possibility of easing geopolitical tensions could increase the downward pressures on, excuse me, on gold's price. But for our bearish outlook to continue, we would require a clear break below S1 at 2.6K. And then lower than that, we have 2,470 for S2. Lower than that, 2,355. Now, for a bullish outlook, it will have to break above R1, 2,685. Now, there is a bit of a dilemma. The possible implications of inflation pressures remaining higher for longer, so those interest rates and then inflation potentially coming back to the economy, could inadvertently lead to increase in the bullish sentiment surrounding gold, which is considered to be a hedge against inflation. So if the Fed comes out and then the three Fed policymakers, which we have later on today, imply that inflation might rise in the future due to the economic policies of the Trump administration, then we might see some upwards pressures on gold. But overall, the dollar is strengthening. It does appear to have regained that correlation with the dollar, and thus we would be maintaining a bearish outlook for the precious metal as long as that 2.6k support level is broken. If not, we would maintain a sideways bias between S1 and R1, but with the RSI at 39, it does imply that the bears are still in control of the precious metals price direction. Intel appears to be retracing despite breaking above that R2 level of 2470, potentially going back down to that 22.10 resistance turn to support level, would be maintaining a slight bullish outlook for Intel. It does appear that they are getting some US government contracts. Also, the Biden admin appears to be pushing through some, if I'm not mistaken, grants, essentially trying to aid local chip manufacturers, which could support Intel stock price as well. Microsoft staying between S1 and R1, OBV forming a new higher high, retracing lower, and then might moving higher. Bollinger Bands have narrowed. If it doesn't break above R1 and R2, I wouldn't really maintain a bullish outlook. I'm still maintaining a relatively sideways bias. Gap down might be filled though. So that's why I'm saying R3 as well, rather than simply R1 and R2. Moving on to Nvidia. 30-minute time frame. If we move on to the hourly, does appear to be moving in a relatively upwards fashion. RSI about to hit that 60, which does imply some bullish market tendencies, bouncing off the mid-range of the Bollinger Bands. We had golden cross, that is bullish in itself. That is good. So we are maintaining a bullish outlook for Nvidia's stock price. ExxonMobil, note that our three level 105.50, bouncing on three occasions on that support and resistance at 119.53. So that is now support. We do have our two at 122.95 and then our three at 125.50. And then we did have those support levels as well. FTSE remaining in a sideways bias between that 8,180 support level and 8,330 resistance line. Tesla, wow. This could be a retracement, but we should note that Tesla's Elon Musk was officially confirmed to be leading the new Department of Government Efficiency. It's a newly formed division of the US government, and that could potentially provide support for Tesla's stock price. Now, the market hasn't opened. So, in theory, for me, this would be a retracement, potentially moving back down to that R resistance level of 299.02, tested and validated. That's actually very, very nice. So this would be support. It is currently resting on our last R3 level, which note it wicked up to, so we were correct on that resistance level. And not only that, the bearish candle yesterday closed on that support and resistance level. So you can see our support and resistance levels are pretty good. But with the new media speculation, not speculation, the new media announcement about Elon, we could see bullish tendencies renewed in Tesla's stock price. McDonald's fluctuating around the 299.55 support level. This gap might be filled at some point, so there might be some bullish tendencies. RSI is at 50. We might be seeing a formation of an upward moving trend line. That E. coli outbreak wasn't good for the stock price. Let's see. If it doesn't break below this upward moving trend line, then I would support a bullish outlook. LVMH has broken below that S1 level of 594.54, taking aim for S2 at 537. LVMH also heavily influenced from developments in China. The potential negative implications for the Chinese economy could be weighing on the company's stock price because luxury goods have a huge market in China. If China's economy isn't doing that great, The first thing that gets cut are the luxury items, aka LVMH. Lockheed Martin, the defense industry might be a bit in trouble with the Trump administration. Volkswagen, oof, maintaining that bearish outlook for the company's stock price. Google moving higher. Note how it's broken our support and resistance levels. So we had placed that as one level, uh, turn to support, turn to resistance, back to support, resistance, support. R2 gapped up, support, resistance, resistance, came back down, acted as resistance, gapped up, support, and now resistance. So we are maintaining a bullish outlook for Google stock price. My next resistance level would be at 188.27. I think you can see that the support and resistance levels that we are placing together appear to be quite spot on as well. Deutsche Bank, not too bad, 50 sideways between R1 and that R3, so 1510 and then 1670. JP Morgan doing well. Dow Jones, that's a retracement if the daily candlestick closes lower than this particular level. Wouldn't be surprised to retracement. We also do have the CPI rates, which are due out today, so that could, of course, influence the Dow, Nasdaq, and the S&P 500. You can see that the Nasdaq as well, it broke above that all-time high figure, might be retracing lower. It's the same story with the S&P 500. You might see a retracement as traders that were in long positions might be exiting. People that bought at that S1 level, that is one level of 5,720, might be seeking to take some profit. So in my opinion, it makes sense that we might see a bit of a retracement today. We are maintaining though a general bullish outlook for the particular index. Now, despite it potentially tracing lower to that S1 level of 5,888, we would not be surprised to see it then continuing in an upwards fashion. Trump's economic policies could potentially provide support for US companies, so support for US equities, which could lead to higher highs for the S&P 500, the Nasdaq, and the Dow as well. But for now, we might see a retracement back down to that S1 support level. For a bullish outlook to continue, we would require a break above R1 at 6,050. And then Boeing is going Boeing. Broken S1, 114.52, now acting as resistance. So I would take this support level and use that as resistance. There is something I would like to see, however, and I just actually need to remember what it was that I actually wanted to see. There was a particular stock that was going to be very, very interesting. We've done Tesla, we've done Volkswagen, we have Lockheed, Google, JP Morgan, Microsoft, Intel, IBM. Let's see. What was it that we wanted to see today? Volkswagen, Rolls Royce, maybe it was Morgan Stanley. Yes, I've remembered I would like to see the Euro Stocks 50. I want to see how. So let's open Deutsche Bank and then I need to right click show all. So everything that's on MT4. And then I'm looking for EU 50. So that's Euro Stocks 50. The reason I want to look at the Eurostox 50 is because we have premature elections in Germany. The vote of no confidence in Germany's coalition government is set to occur on the 16th of December. That is essentially a done deal. And we are heading for early elections on the 23rd of February 2025. That's EU 50, Eurostox 50. Now, there are a couple of issues with those early elections, but let's take it from the beginning. Germany's coalition government is ruled by three parties: the SPD, which is the leftist socialist leaning party, the Green Party, so the Grün, and then we had FDP, if I'm not mistaken, which is more conservative. but it's center right, I would say. So that was called the Traffic Light Coalition. Now, the third party, which was the FDP, has decided to exit the coalition, which means that the German Chancellor, so Olaf Scholz, is going to be hosting a vote of no confidence. Now, it is given that he will not survive that vote, essentially a done deal, and they have agreed to have early elections on the 23rd of February. Now, there are some issues. The, the SPD is third in the polls. The first is the CSU CDU, which is former Chancellor Merkel's party. Then we have the AfD, which is the far right nationalist party. Then we have the SPD. There is a bit of an issue in terms of the coalition governments that might be formed. It is very difficult for the CDU and CSU at their current polling rates to form a government. They need other parties. The question will be which parties enter the government. If the SPD manages to pull off a win, that also remains to be a question. Who will support them? The Greens? Yes. CDU, CSU, that was one option as well. Will they? It's too soon to say. There are issues in Germany. There is political instability, and thus that could weigh on the Eurostox 50. That is bad for Europe. And I'm not saying bad in terms of a leftist or a right government. I'm talking about early elections and political instability. That is bad. So for the Eurostox 50, so this instrument, which is essentially on our MT4 platform, it is EU 50 cash. That is the EU's top 50 companies. So same with the Nasdaq, etc. So we will be looking at this on roughly a daily basis, seeing the developments in Germany, and then we could discuss poll numbers, see who's in the lead, see what coalitions might be formed, promises being made from various political parties. Now we are on the hourly time frame. We could move to the 4 hour, or we could even move to the daily chart. Now what I would do is I'm going to move from the daily chart, and then I'm going to drop down to the 4 hour, and then to the 1 hour chart. And that might be the last chart we do for today. So I would pay close attention. We need to find a support level. Now we are on the daily chart, which does help that a little bit. You can see there was price action, and I don't know if you can see my cursor on your screens. So just to make sure, I'll show you what I'm looking at. There we go. This is the area upon which I have seen support. Of course, it's easy for me to say with this daily bullish candle being formed. But note the boundaries of this rectangle that we've drawn. It coincides with the opening of this bearish candle, and then almost with these two wicks. So what we would do, we would take our horizontal line, as you can see top left of our screens. I think you can see it's around here, just below the insert button, horizontal line. And then I would place my support level here, coinciding with what I just said, which is the opening of this bearish candle, and then with the opening of today's candle, and relatively close to these two wicks. So that means we are seeing support as a support level at 4,715. But then you can see it moves lower, so we have to keep that at 4,717. Better, coincides. So this for me would be a support zone. Now I do need to find S2. For S2, I want to look lower. I'm also going to be drawing a rectangle. Now, one could look at that bullish candle to the left hand of your screens that is way below everything else. That could be a support level, but we are on the daily, which means we might find a support level a bit closer to the current price action. So we have a swan, and then we're looking to the left hand side of your screens to the price action that is moving upwards. And I need to find where I would be placing my S2. It's a bit difficult with this price action that we're going back to here, which is that deep retracement, but we do need to find a support level. So what could we do? We could take the closing of this bearish candle, draw this rectangle to this bullish candle's wick. So there was support, broke below, and then there was resistance. And let's extend it and let's see what happens. So this is the area we're now currently looking at. I can see there was another touch on the upper boundary of this rectangle. And to be on the safe side, we could place that support level here. And then the next support line, that would be a bit too close, which means we might need this to be lower. But in order to be more correct and to be more precise, let's look at whether or not there was actually support. So the S2 level, we can see this was resistance turned to support, not so much for that S3 level. Whereas if we place it here, you can see it's support, resistance on two occasions, and we don't have historical data. And that doesn't really coincide with the recent price action as well. That is a bit concerning. But it does coincide with the opening of this bullish candle. We take this old high, broken, turned, so a resistance turned to support. Then we come back down, acted as a support level and moved higher. In theory, this could be our S3 level, 4,580. I would be a bit concerned with that S3 level, if I'm being entirely honest. But for S2, 4,655. And then for S1, 4,717. And now we need resistance. Because I still can't see my cursor on your screens, I will be still using these rectangles to identify the area upon which I'm looking at. Voila. So this is the price action I'm currently looking at to find my resistance level. As you can see, immediately, 1, 2, 3. Wicked, support. Support, but broke below, pierced through, came back up, found support, acted as resistance. Came back up for liquidity, filling that gap, and then moved lower. Resistance is at 4,800. That would be my R1. Using the same rectangle that we've drawn, we will be finding our resistance line at R2. This high here acted as support, broke below, resistance overall, wick, touch, wick roughly on two occasions. So we're keeping that as resistance. And then for R3, too close. This price action really doesn't help. This R3 line is peculiar, but we can use this wick. Remember that, see this gap? Filled, resistance, 4,945 as our R3 level. Now I can see that I've drawn these lines, but they're not that clear on your screens. So that means, of course, we will be adding our text labels, and that will most likely be it for today. Germany's political story is going to be very, very interesting. I want to see which party comes into power. Will the CDU/CSU cede and form a coalition with the AfD? That remains to be seen. Will they try and form a coalition government with the SPD? That also remains to be seen. Will the SPD manage to regain its control over Germany's government? That remains to be seen. On the flip side, we also have now President Trump across the Atlantic. Those policies, economic policies, will be very interesting to see how they play out. It's going to be interesting to see who is being placed in the administration, because we could have a financial release, for example, like CPI rates today, right? Let's say the CPI rates come in lower than expected. Instead of 2.6, they come in 2.5 or even 2.4. That, in theory, would be good for the Fed. It shows that your restrictive monetary policy stance is working. And thus, you can remain on hold or you could opt to cut. With Trump now in power, and it's not just because Trump is in power, even with Kamala in power, if she was elected as president, there would still be implications of the incoming administration's economic policies. So that could also lead to the Fed taking a bit of a more different stance, perhaps remaining on hold for a bit longer, concerns about rising inflation again. So now it's more of a politics game. It also does depend who is elected, who is appointed to what position. As a reminder, cabinet positions, so Secretary of the Treasury, Secretary of State, require Senate approval. But that is in a Republican majority. 53 senators are Republicans, so they do have that majority, which means they will most likely, if not guaranteed, passed on every single time. So whoever is being appointed, you could see a market reaction in anticipation that they will be voted through. So that remains to be seen. Whereas advisors, so the chief of staff, Susie, alongside others, do not require Senate approval, and thus those are with immediate effect. I think Elon and Vivek's new position, so the new department, is does not require Senate approval. So that is going to be interesting to see as well. Let's see. So we will be monitoring the announcements, who gets what, which position goes to who. Then, if Marco Rubio is confirmed by Trump as his Secretary of State, he is not pro China. That might be bad for China, might be bad for the US in the long run, but we could see an impact on the Aussie and the CNY. So those appointments do matter. So keeping an eye out for who gets what might be a good idea. That's what we're doing here. Personally, I check about an hour or so to see who is where or if there have been any new developments or announcements, because then we can see how the Trump administration is going to look. Personally, and our opinion is going to be mostly Trump loyalists, which makes sense. But that remains to be seen, as it is speculation at this point in time. We have placed our support and resistance levels for the Euro Stocks 50. EU50 cash is the ticker. The RSI is at 37, which does imply a bearish market sentiment. Bulge bands are tilting towards the downside, not looking that good. So we will be monitoring Eurostox 50, uh, particular for the rest of the month, December, and in January and February as well, as those elections near and polling numbers are updated more frequently. And with that, that does it for today. I will see all of you tomorrow. Thanks for tuning in, and I'll see you next time.